Disconcerting, but we'll get Ekta to decode this for us. For now, Lupin is reacting to that, down about 0.7%. You can see details of the observations on your screen. But as promised, let's get Basant Maheshwari, the author and portfolio manager at Basant Maheshwari Wealth Advisors, to tell us how he is approaching 2019. Hi Basant, good morning and Happy New Year to you and your entire team in advance. I was just going through your Twitter page and you have mentioned that, the words that you should use when you don't know what to say are things like cautiously optimistic, stock pickers market, selectively buy on dips. Are you going to throw all those words at the viewers today when you're going to talk about the markets?
No, I don't think so. Good morning, Sonia. Good to be with you after a while. I mean, we have to say something because we are called to say something. So when we don't know what to say, we use all those jargons. But let me tell you on a serious note, I think this market has bottomed out. It's very foolish of me to be making such predictions on national television. But if that NBFC issue, the ILFS scare, the scare of the Lehman moment for India couldn't help us break 10,000, I don't think anything else would, unless there's another external calamity. I think the market is now getting ready for a bull run. And the market, and there are two factors for this bull run. If you would like to, if I would like to share with you. First is the market is discounting that Mr. Modi is coming back with a smaller seat share, but he's coming back. And you know what happens on the day of the results on May 2019, the market will either go up 500 points or come down 500 points. Retailers will either sell out or get sucked in, and the institution guys would have priced the market perfectly before the results. See what happened before the assembly elections. That's one part to it. So whatever has to happen will be priced in first, so you can make a prediction on the politics by looking at the Nifty. That's our take on that. And secondly, I think the RBI is now going to do a complete U-turn. It's going to be very, very favorable. And I've been hearing all the commentary on television of how the RBI should be autonomous and all that. But if you just go and see what happened in 2008, the Federal Reserve got in. It said, okay, you have bad assets, give them to me. I will take it on my balance sheet. The Fed took about $9.5 trillion of toxic assets. It saved the entire global economy. So you have to think out of the box and out of the book. I think the RBI will facilitate in the new format how the liquidity should come back into the market, interest rates will come down, and I mean, I'm painting a really bullish picture. I hope we get it right.
All right. So how do you approach this bull market? If you had to put your money to work right now, which sectors and stocks would you bet at? Would it be the consumption play because you think the government, the government could get prime the economy ahead of the election? If the RBI is going to be cutting rates, is it the financials which will look attractive? How do you approach it and put your money to work now?
So obviously consumer and financials, I think they're going to lead. So the biggest problem right now which we face is, I mean, there's a $4 trillion farm loan waiver expected. And I think it's better that a reasonably elected government with some sense of macroeconomics within them does it. Because Modi would do it, farm loan waiver, Mayawati would do it, and a Mamta would do it. So why not let Modi do it? That's the best which we can think. And that's going to spiral a rural impact on the economy. So cement, consumption, everything would do well. But we are very selective in what we buy. So we normally don't look beyond consumers and financials. And when interest rates go down, and when the markets were falling in October, the financials were down 20-30% from these prices, nobody could buy in because we were waiting for the worst and assuming the worst. So I think these two sectors would lead it. Banks, especially the private banks, the NBFCs would do very well. PSU banks might give you a better return, but then will you be able to hold on to the profits that the PSU makes for you? I don't know. So we don't do PSU, though we think that PSUs might do better because the PCA would be tweaked. I think right now there is a man with a mission on Mint Street. So let's see how he turns out to be.
Okay, like you said in one of your quotes, "Rok sako to rok lo," right? I mean, let's see which way this heads. But another thing you had written to your clients in one of your newsletters was, we are happy to own expensive stocks as long as they return the favor back by growing at above average rates, which would mean 30% plus. So are you trying to say that even in this market, it makes sense to own names like, say, an HUL, an Avenue Supermarts, a Page Industries, despite the high valuations?
No, Avenue grows at around 25-30. We own it, no recommendation. HUL doesn't grow at that rate. But we figured out that a stock which grows at 15% with solid fundamentals and which is down 20% from the top, it can make you 30%. So if not from earnings growth, there'll be some sort of a catch up to the price and some sort of an earnings growth, but we don't do all that. So we normally have the Bajaj Finances and the D-Marts, which we have owned for a while. And there's a big cloud over a private bank, like, because some bank was asked to dilute equity. Small sized banks were asked to get the voting share down, the promoter share down. And let me take you back, about 40 years back, as you speak about HUL, George Fernandes, who was a big socialist, compelled the Unilevers of the world, the Colgates and the fancy Procter & Gamble's to compulsively dilute equity in favor of Indian shareholders. And that is why so many families and so many homes have been built with these 30-40 years of investments. What is the present government telling us? It is telling the A-class Indian banks to go and dilute in favor of the foreigners. So why this U-turn? I mean, let the Indian assets remain with Indians. Cut the voting right of the promoter. Bring it down to 20%. Okay, you cannot vote beyond 20. So that's about it. We are forcing Indian promoters, A-class Indian banks, to dilute in favor of Canadian pension funds and US pension funds. So we might have a vested interest across, but find it really strange as to how we sit back and we glorify the levers of the world, the ITCs. But that was done because somebody had a mindset that these assets should remain with Indians. So I think the government should think of it in those lines.
Okay, you said PSU banks may actually outperform the private sector banks, but you wouldn't want to put your money in it and you don't hold PSU bank. What is the risk which is attached with it now?
So the risk is the moment they get extra cash, they might say, hey, there were 2 more people who are right now sitting in Cambodia and not paying us. So we don't know to do all that.
Okay, then before we let you go, Bajaj Finserv is one stock that you mentioned. I take that point entirely because Sanjeev Bajaj is one person who came on record and said that growth will slow down, but it will still be 20 to 25% for something like a Bajaj Finserv. In that lot, do you still stick with these quality names or do you try and look outside as well in the other fallen NBFCs?
Absolutely. I mean, in Sonia, there's a saying in Hindi, मरना है तो बड़े डॉक्टर से मरो. So if you have to lose money, lose it in a high quality company, because if you can hold it a little longer, you get the money back. So if you have to die, go to the best hospital. Don't go into a government hospital on a roadside. So that's what we do.